We
It is
go.
November
Uh,
3rd.
Oh, November 3rd. There we go. Let me share my screen over here so that we can start having a look at the charts. There is actually a setup going on right now on NAS. And we would have, again, pretty clear. We just run over the basics again. I like to. There's your trend line showing up. Over here on the right-hand side, you can see all the lines in the alert panel are trending up across the board. The 1 minute all the way up to the daily is all up. So there's no reason to think it won't go up. Let me, hold on one sec. Let me just take that profit there. Okay, hold on. Let's get back to here now. So I got in right here, by the way, and I just got out right here. So we're on the uptrend here. We are kind of going sideways a little bit, but this is a breakout here. So what would happen if you draw a trend line? Um, Actually, let me get the cat. I like to take the candles off when I'm drawing lines, so I can actually see the candles. So when we've got a trend line, we would be looking at uh, you've got a trend line. Actually, you've got a trend line actually going like that. It's not flat at all. Um, but you've got another trend line that is flat going across here, roughly. If it breaks here, obviously we'll look to see it going further up. But a trend line's got to have three touches. One, two, three. On the bottom, one, two, three. Trend lines don't have to be straight. Earlier on, there was a trend line that was going up here. You can see we had four, one, two, three, four touches on that trend line, and probably down at the bottom, we probably had the trend is about there. We actually got a touch here. It came off there and touched again here. There's your third one, and then actually touched again here, and then it broke down here. So that would have been the trend lines earlier. And what we do with trend lines is we're waiting to see which side it breaks through. So this one actually could probably come down a bit to the top of the candles like that. And then we would have broken through right here. Um, let's see here. We did get the crossover up there. And of course, on the blue, we did get the crossover up here. So obviously, this line here is our first thing that we look at. Second thing we look at is over on the right-hand side here. All these are all in an uptrend across the board. So there's no reason to believe that we're heading down anytime soon. We got the early setup here, actually dipped below here, came up, came back down to red, actually popped up about there. So if you see where that dotted line is, it coincides right with that blue crossover where the blue went away from the red. So there's our first indication, came a couple of minutes. This is the 1 minute chart here. So that indication there came on that candle there. So 1, 2, 3, 4, about 5 or 6 minutes, we got the heads up there. that were going up. Then we got the heads up here, which was like 2 minutes before. Then we got a crossover. Oh, didn't get it. Then we got a crossover right there. We also got, let's get rid of these trend lines for a second so it's clearer. And we can see the Bollinger Bands are expanding here and expanding here. Okay. Now, with the Bollinger Bands, the significance of them expanding, going apart from each other, is that's bringing volatility into the market and it's bringing volume into the market. And it's the most important thing is the volume. So when you see these going wider, so you can see here there's one, and here there's one. Here's one, and there's another one here. I'm nearly off the page there. This one is going, and this one, if you go like that, is also opening up. But what happens when they start closing here like this, then the volume is going and we're going to be in range. So usually I don't trade that. Okay. I would want to get out of that. Okay. So this is very rangy. As you know, I like to see the candles in the upper gray area of the Bollinger Band for buys and in the lower gray area for sells. So these were all buys up here. They're very good. This is going in and out, jumping from one to another, and it's in the white zone. I don't like white zone trading. And you can see how little these candles are because there's just no volume, because the distance between the Bollinger Bands are also indicative of the volume. So when they're wide apart like that, there's lots of volume, there's pips to be made. Wide apart like that, pips to be made. Wide apart like that, pips to be made. When they're narrow together, which you can see here, they're very narrow. There's no pips to be made. Okay? These are very close together, the Bollinger Bands, and they're not really going up or down. You know, they're very much going sideways. Might be a little up down here, but, you know, probably not to trade. A little bit up here, but it was in the lower Bollinger Band. A little bit out here, but most of it was in the white area. So our first area was this part here. And so if you put our candles back on, we can see we had some red arrows. Let's just open this up a bit more. We had red arrow, red arrow. We did have a blue arrow, but we had another red arrow. These two blue arrows we can't take. Why? Because the blue hasn't broken above the red yet, and the Bollinger Bands aren't expanding. But then after this red candle here, and bear in mind, we already had one indication here, two indications, three indications here that we're looking to go long. And then this was a blue candle here, and then we had the crossover basically right here. And then the Bollinger Bands start expanding. If we put our magic PSARs on, let's see what they tell you. This is underneath here, so this is in buy mode. But again, this is all in the white zone. It's not very interesting. Then it goes up here into the above the candles. So now we're on sell mode. We're not looking for sells because our trend indicates all the way along we're looking for buys. Then it switches here. The PSAR flips here. But look what came here. Right on cue. Right on cue. This is gold, actually, we've switched to. So but it does matter. It's done the same kind of thing. Right on cue, we've got our macro trend arrow right here, showing that that's where our crossover is. We've got a crossover here. We've got a crossover into the blue here. The PSAR dropped here. And again, like we say, right here, we would put our stop loss right on that bottom PSAR like that. And then as it moves up, we can move this to the PSAR, to PSAR, to PSAR, to PSAR, to PSAR. Okay, look at that. At stop loss, we would have been in right around here. And we would have been already in profit. We've already made that much profit and it's still going. And there's no reason to get out. We're in the blue here. If this line here crosses down through the red like that, that would be an indication that we could get out. But if it turns around and goes back up again, we could get back in a re-entry for another buy. But right now we were in here and this is still going. There's still no reason to get out. That's on gold. We can go to, let's go back to the NAS, which we were on before. I know everyone likes trading gold. So NAS was exactly the same here. Well, it's not exactly the same. The PSAR flipped here, but that wasn't an entry. We were coming down through the red here, and we were in the red down here. We did pop out into the blue, but we needed this crossover here to make it really firm. And this was actually coming down, so we wouldn't have got into any of this. The Bollinger Bands weren't expanding. The candles were very small. The blue crossed over right here. So that was our entry right there. And then we would have taken it up to here. I actually got out right here because I thought it was going to cross the red right here. It actually didn't. But nonetheless, I got some nice pips from it. So that one was 133, so 149. So that was 16 pips right there. Right when I was talking to you and answering your questions. Once we cross down here again, you can see the Bollinger Bands are starting to contract, i.e. they're getting close together again. So again, we got no volume. We've got these macro trend lines here, pivot lines, macro and micro pivot lines. So right now we might be bouncing off this one, but we'd need to bounce off that one, meaning it might go up like this, come down, and it's got to bounce up through that for us to know it's going back up again. But it could just no, let's get rid of that. Let's get rid of that. It could go up here. Let's get that back again. It could go up to this line and then bounce back all the way down to this line again, go up and then go down. That's unlikely because we are in an uptrend and we are in an uptrend here. But here's another thing to think about. Let's clear all of these for now to get them off. When we're looking at our candles, our candles here are going away from the trend line. Okay, again, they're opening up. Now what we've got, if it continues, is this is getting closer and closer to our main trend line. Okay, and then the danger is that if this carries on up and this carries on over here, is eventually it's going to go below this trend line and then we'll get into sell territory. So that's why the distance between where the candles are and the trend line is also important. When they get very narrow and they get very close together, I don't think we've been that close at all on NAS for a long time. Let's go to a higher time frame just to see if I can show you what that looks like. Yeah, so here, for instance, we would have been risking this coming down like this and eventually crossing that line. It actually didn't do that. It bounced back up and it was actually going away again. But as it gets closer and closer to the trend line, you've got to be aware that there may be a change of direction. I went to the 30 minute to show you that example. But right now, as you can see, 30 minute, it's just been going up and up and up. Then we went into range consolidation, and now we're headed up again. This is in the blue. This is staying up here. It's tried to jump down, but it hasn't even gone down as far as the blue. If it does come down to the blue and then bounces up again, that is another entry. So right about here, where it bounced off, would have been right about here. Well, it was in the white area. I wouldn't have taken that. I would have waited for this one here. This is my entry here. So the key is that you've got to, no one indicator should be taken on its own. And if you can do it where, hi Brandon, if you can do it where you've got, like I said, if you've got 5 indicators that tell you to get in, then that's strong. As you get into as you get more experience, you can then maybe look at 4, but I would never go below 4. And certainly 5 is stronger. If you can get 6 or 7, obviously the higher numbers that show you what's going on, the better. And also down here, we do have convergence because we've got higher highs, higher highs. So that's convergence, meaning we're still going up. When we have, and here you can see this was convergence, higher highs, and on this line, going from this line up to here, higher highs. Okay. So, we haven't got any divergence to tell us that we're moving away. And again, another thing that I like to look at, let's get rid of that. Let me just zoom in here for a minute. So again, when the blue line is moving away from the red line, then we're likely to see it continue going up. When the blue line, if we look back here, when the blue line starts coming down towards the red line again, like this, we'll be looking for it to stop going up. And as you can see all the way along here, there was a nice uniform gap, maybe a little bit wider from the blue from the red, but there was a decent sized gap between them all the way up until this candle here. If you're in this trade here, well, this was the big move here from, we're on the 30 minute. This was back on the 18th of September. But if you'd have got in here, actually, you would have got in about here. Yeah. You would have got in about here. What is going on? You would have got in about here. And then you would have taken all this all the way up to here. You wouldn't have got out. You had the PSARs all the way up, all the way up. this actually would have stopped you out. So if you had your stop loss set here, for instance, on this PSAR, and you were moving it up to this one, then this one, then this one, then this one, then this one, you would have moved it all the way up. You would have stayed in profit. Your last one would have been there, and this candle would have wicked down. See where it wicked down there? It would have taken out your stop loss. So you would have, but you would have made money from here where you entered to here where your trailing stop loss finally ended up. Okay. The PSAR flipped again here. So you could actually have got in on that PSAR right there and then followed that up. You would have made all that money again, all the way up, all the way up. And then obviously we would have got out when we got into the white area here. Let me get rid of those indicators so they're out the way here. Stop it. This is what we call an engulfing candle. So an engulfing candle is a candle that's bigger than the one before and a different color. So this engulfing candle would be your signal to get out. So you would have been in, you would have been in here. You would have been out when this hit your stop loss here. You would have got in again here. And you would have got out on this engulfing candle there. If you didn't get out there, you would get out when it went into the white area there. And as you can see, the blue started turning down there. So if you didn't get out on that candle, you would have got out there. So you would have made pips from here to here, and then you would have made pips from here to here on that move there. Okay, let's go back to the 1 minute just to make sure we're not missing any nice setups here. See, the PSAR flipped here, but you're still in the white territory, white territory, white territory. This is expanding a little bit. We have crossed back up through the red. We are in blue mode here. You could get in on that one. And then put your stop loss on this PSAR here if you got in on this candle. This this probably was your better entry on one of these candles, but they're very small. But the Bollinger Bands are expanding. You've got the PSARs below. We had to cross over the blue into the red. We're in the uptrend. Right here, we have is this the micro or the macro? That's the macro. So right here, we've gone through the macro pivot. The micro pivot we already went through here. So we are heading up. We're well in the blue zone. It stayed up there. Unless something untoward happens here. This is so we got 1, 2, 3, 4, 5, 6, 7 indicators on this one to show you, and even breaking the macro pivot here, that's probably 8. There's not much volume here, and see how wide the Bollinger Bands went here, as opposed to this is not expanding that much. It's expanding slightly. So we're not seeing a real strong move here. Might not be a great move. Again, because we're going a little sideways here. Down here, if you didn't get in here, when this turns down here and goes like this, then that could be another entry there as long as that stays up in the blue. And again, it's just moving very, very slowly because we're in Asian range here. This might cross up here in a minute. Let's get rid of that one. We'll see where that goes. Okay, is that clear for everyone? Is everyone sure about what I'm doing here on impulse as to how I'm taking those trades and everything and what I'm looking for? One of the things about trading is you're basically looking at the same thing over and over again. So the more you look at the same thing, the more you get on calls like that. Sometimes people think it's boring, or he said the same thing last week, he said the same thing the week before. Yes, exactly. Because there's a right way and a wrong way to trade. And so I can't change what I say each week, because what I'm saying each week is the right way to trade. I can't change that. But for me, the value when I first started, and even now, I'm on go lives at least 3 or 4 times a week, live, and I watch recorded ones with all the educators, because I'm constantly learning and I'm constantly reaffirming what a good trade looks like. And the more we can recognize and be patient for a good trade to set up, the more successful we're going to be. That's always, always the case. And so here we go right now. Look, we're turning up. We went up here. We started turning up through here. Our blue line is getting away a little bit from our red line. Our PSARs are still below. We've got the blue candles still going all the way up. We're still heading up now. These are expanding a little bit more, the Bollinger Bands. So we're going to see this probably go up. I don't know how high this will go up, but probably 2170 might be a good target if we're doing a risk reward. Let's go and have a look at that. If we go in, and let's say we were in on this candle and we wanted a risk reward of 1 to 2. Actually, we'd have to go a little bit more. Let's put it on that candle there. That's our PSAR. 1 to 2. We like 1 to 3, but 1 to 2 will be 170. And the reason why I'm doing 1 to 2 is because we are in Asian session. We got no volume from London and New York. So you got to remember, when you're trading in the evening on Sunday, 1 to 2 is probably a decent ratio to go for. Sometimes even 1 to 1, just because we don't have the volume in the market. When you're on London session or New York, then obviously 1 to 3 is what you're looking at. And how does everyone know how to use the long position and the short position measuring tool over here? So over here on the left, you've got a long position. If you click on that little arrow there, it'll show you a long position or short position. Long means a buy, and short means a sell. So because we're in a buy, we're looking at going long. So I click on that button. I put the middle where our entry is, which would have been on that candle there. I put my stop loss here. You can see the stop loss actually on the PSAR. Like I said, that's why I like the PSARs. And then you just drag this one up until this volume here, risk reward ratio, says 2. So it shows you very easily. You don't have to figure anything out. What's my risk reward? It's very simple. Would anyone like me to show you how I do that again? Or has everybody got that? Everybody got it? Good, Emma, thanks. Okay, so that's how you work out what your risk reward is, 1 to 2. Put the central line on your entry, your bottom red area on your PSAR for your stop loss, or wherever you put your stop loss, and then drag that up until you see 2 or 3 or 4 or 5. In London and New York, it can go much bigger. And then you'll know that's your stop loss up there. Okay. And then the other thing you can do is you can put your fib on here. And again, you would go from the bottom here up to the top here. And you would see, let's expand that. If it, let's get rid of that. Let's get rid of that so we're not looking at that anymore. But we go up and up and up and up. We're coming down here as long as it stays above this 50% line at a stretch above the 618 fib, it's still going to go up. When it breaks the 50, we should be wary that it's going to go down. If it does break the 618, you've got to get out no matter what. But your stop loss will take you out anyway. Okay. All right, guys, I'm going to stop the recording now, and I'm going to stop that share. I'm going to stop the recording.